Hello friends, Jason from TheChartGuys taking a look at silver today. Yesterday's video we spent a lot of time talking about that zone of resistance, and it looks like we are pulling back from that on the daily time frame. And I want to just highlight the length and overall strength of this trend going back to February 2017. This is held, so longer trend holds, the more important it becomes, the more reliable the resistance becomes, and more important the break of that trend becomes when it does eventually happen. And it will eventually happen, we just don't know when, but we will be ready for it. And if you're watching these videos, I hope you will also be ready for it. Anyway, let's go zoom in on the daily time frame and take a look at what we were talking about. So yesterday's video, we discussed how we can pierce this zone of resistance and still expect a turnaround. So finding and identifying short opportunities as we encroach into these zones of resistance are perfectly good and very often very reliable indicators for short entries. Also, we hesitated people going long when we get into these positions because just because you're breaking above that weekly trend line does not mean you're going to follow through. And we are starting to see some pullback after yesterday's big move to the upside. Our high of 15.69 is pulling back, and it is pulling back like it has before every other time we've got into this zone of resistance. So in today's video, what we're going to talk about is essentially what is happening and how we could recognize it. So I'm going to jump to the hourly time frame. Here is our stair step action, getting higher highs, higher lows, perfect. Big boost on big volume. We get our 1569, our RSI peaks up here around 80 before pulling back. And that itself is not necessarily going to be your short entry because in massive breakout situations, the RSI sort of gets thrown out the window. But because we're dealing with this area of resistance, we know that our zone of resistance is up here. Our peak is around 1578. So we're at 1569. We're extended on the hourly. We're coming up to the very limits of our zone of resistance, and we're starting to hunt for reversals. So let's start with the 5-minute time frame. Here we are. We set up a big move. We get our initial bounce. We get a continuation, 1569. We get a lower low as opposed to what we had over here. Let's call this guy our low of 1556. We establish a base of 1554. We get a new lower high, so 1569, almost a double top. In fact, I would be comfortable calling that a double top. So I would write that in here as a double top. So we get our high, we get our lower low, we get a double top resistance rejection. We start a downtrend, so lower lows, lower highs. Finally, we get this double bottom here at about 1553. Actually, not so much a double bottom, very close to it. But in fact, we did see a break of that. It wasn't as close to here. So a lower low, 1553, 1554, and now we are still seeing that downtrend breaking again. And should we lose this support of 1553, which it looks like we are about to do, if I'm getting that right candle, that's going to be very, very bearish for the bulls overall, not showing a lot of strength. And because we move so quickly, so fast, without establishing much support, there's almost nothing on the 5-minute support or 5-minute time frame for support. We need to go to the 15-minute time frame, still no support until we get down here at 1536. So if bulls lose this position and bears are able to drive the price down into this territory in which there is no support, the next likely place they will find support is down here, back inside the trend at 1536. Currently, RSI is happy right around 40. Hourly RSI is mid-range 55.80, and things are looking not great for the bulls at this time. So if we see the continuation that we expect to see in this situation, given the overextension that we saw, the pullback, the loss of some key levels, then it looks like we're going to get back inside our territory for that very, very long-term weekly trend line. In order for bulls to turn this around, what needs to happen? Well, we need to keep setting this base of support. We need to establish this friendly area around 1533, 1534 as having some significance for us. We need to bounce there for a while and start getting highs. We need to get over 1557. We need to establish higher lows, and we need to get back up above and show the bears who's boss by breaking through this double top resistance. I don't know if we're going to get there since this trend is just so long, so strong. I think it's more likely that we'll get down to the downside. And if you're going to make a trade based solely on this, what we would be doing is looking for a short entry on the loss of 1553, so right about now, and we would exit if we get new highs. Conservative would be a new high over 1557 because the bulls should not have that strength, and then a less conservative exit would be a new high over this double top area here. And the potential, should this short position work out for you, is for the bears to possibly go as far down as 1265. Now that is an extreme best case scenario. I'm not telling you that's going to happen, but you know, we play the levels and we play the trends. So that's just one scenario. I hope it was helpful. I hope the silver coverage is working out for you guys. It's a lot of fun. I enjoy doing it. And if you want to learn more, check out chartguys.com or just Google technical analysis.